Throughout this episode, I will reference a short presentation about mining myths and opportunities by Garrett Goggin, which was filmed at the Metals Investor Forum on January 18, 2025. The video is available if you read the article on Substack. It should come as no surprise that I've been smitten by the mining bug. I own both a few publicly listed junior miners and royalty companies, as well as a private gold mining, minting, royalty, and lending company. Owning miners is rarely fun, but when it is, it's fun in spades. My own experiences have been a rocky road, to say the least. My private company got completely shafted by the Colombian mafia and a publicly listed company and their lawyers several years ago, but we've recovered fivefold since then. That strong run has just about taken us back to square one, albeit with great momentum, so from here on, it's happy times. My early ventures into EMX Leading Edge and URC yielded several 100% in performance, but since then, not much has happened. You wait, time passes, as my old text-based adventure games on my ZX Spectrum 48K back in the early 1980s used to answer my command. Right now, my main hope for golden glory in the junior mining space is through Canagold. Before this decade is over, they should have passed all regulatory and construction hurdles to produce 100,000 ounces of gold per year for less than $1,000 per ounce. With a margin of $2,000 to $3,000, that amounts to $200 to $300 million in annual profits, which should then, by 2029, be valued at around $1.5 billion. This valuation also takes into account its expansion potential for both gold mining operations and other metals. The current market cap at 20 cents US per share, or 30 cents Canadian, is just $36 million US. We're talking about a potential 40 times return, or more most likely, in 4 years. Excluding dilution and other financing and investment costs, perhaps half that is more reasonable, or maybe we should call it an even 16 times, which is 100% per year for 4 years. That would mean 30 cents Canadian in 2025, 60 cents in 2026, $1.20 in 2027, $2.40 in 2028, $4.80 in 2029. Is that something you'd be interested in? Junior miners, especially pre-production and pre-permit companies like Canagold, are priced this way for a reason, or for several reasons. There is political risk, weather risk, construction and cost risks, and the price of gold itself to consider. They are asset-heavy, with high financing needs and large equipment investments, as well as personnel costs, unions, injuries, and delays. Flipping the coin from juniors to royalties is the logical thing to do if you lack the stomach for junior miner risk. A royalty company finances junior miners against call options or other compensation schemes on their future production. Royalty companies are in effect gold fintech companies that take the opposite side of junior mining risk. They are asset-light and effectively risk-free, aside from the sunk cost of lending out money to the junior gold company. That is why royalty companies like Franco-Nevada enjoy profit margins of 85 to 90% and trade at 20 to 25 times revenues. Once the money starts flowing from juniors who have turned into producers, it's basically free money, free cash flow independent of the underlying commodity price, without any burden of employees, equipment, or land. The recommended investment strategy is to look beyond market capitalization and focus on free cash flow per share. Investigate royalty companies and smaller exploration plays, and be sure to understand the entire life cycle of mining assets. The gold mining sector offers more nuanced opportunities than traditional investment approaches suggest. Don't forget to check out theinvestingcourse.com, read some of the raving reviews there, and join the waiting list for the next cohort. Standing in line is free. I've had 0 complaints on the course and about 1,000 out of 1,000 satisfied participants, even if some at first have thought that the fee's a bit steep. $1,000 is a price only people serious about their money are ready to pay for leveling up their investing skills. Everybody felt they got their money's worth several times over after the course. Links in the show notes. Investing in yourself, including your finances, is about enabling as durably meaningful a life as possible. This is Carl Michael Siddings, AI, signing off. See you again in a few days. You are listening to Carl Michael Siddings' AI Alter Ego. This podcast is created based on my own writings, primarily from Substack. Spreadzer AI focuses on investments in mental, physical, and financial health. Topics range from pure investment cases, which of course should never be considered financial advice, to my experiences and advice on training, nutrition, and sleep. In between, I talk about consciousness, meaning, free will, politics, science, psychedelics, perspective, and meaning, and whatever I think can help make you become happy, productive, fulfilled, basically realize your full potential, or bliss out on purely hedonistic pursuits. You can actually read the podcast content too on my Substack if you're a premium member or during a 1-week free trial. Click the link in the show notes. If you're interested in more in-depth investing skills, you should check out theinvestingcourse.com. theinvestingcourse.com, meaning myself, is sponsoring this podcast. It's a 6-week online course where I teach how to find, analyze, invest, and evaluate publicly listed stocks. There is a Swedish version as well. The links are in the show notes. Now let's dive into today's podcast, Royalty Companies for the Win in the Long Run.